The International Energy Agency has said the world faces its first truly global energy crisis as a result of the war in Ukraine. The conflict is expected to have long-lasting effects on energy supply and markets. The agency added that unaffordable energy bills remain a huge problem as the exports of oil and gas has been restricted. But the crisis should also be seen as a turning point, speeding up the world's transition to green energy. But despite all this, natural gas prices in Europe have been plunging in the past 2 days as full storage, lower demand and also a mild weather have eased concerns of a spike in power prices, at least for now. Analysts say they are now starting to get worried about next year. Take a listen.
The next year is going to be even more difficult because the gas tanks at the moment are full, and if at the end of the winter, when they're empty, mostly 20–30% or even less, I think at the end of the winter 10% usually they're only full. If they don't get enough gas from Russia, which they're not buying at all, then it won't be possible to fill them for the next winter, 2023–24. So we might even have a bigger crisis next year.
To understand more about this now, we go to Yousef Alshammari in Riyadh. He is the CEO of CMarkits and Senior Research Fellow at Imperial College in London. Welcome, Yusuf. Many thanks for being with us today. So, Yusuf, what's happening? Because we've been talking about an energy crisis for months now, but at least in Europe, natural gas prices are plummeting, to say the least, these days. What's happening?
Hi, Litete. I'm very happy to speak to you. Well, as we can see, the market has kind of a shock. It has had a shock, many shocks actually during 2022. Of course, first since the war on Russia and Ukraine has sent the first shock, and then of course the suspension of Russian gas going to Europe. So, in fact, what we currently see, of course, Europe has taken several key measures to reduce its dependence on Russia and also to enhance energy efficiency. And of course, the stocks are currently almost 95% full, which currently has been priced in by the markets now. So it's not just a matter of the stocks, but also I would say here, one important thing is reducing consumption. Another factor here is the weather currently is not, the temperature is not very, very low, especially within Europe, to spike or trigger a major consumption yet. So I would say prices are certainly better than the shock that we saw a month ago. And certainly one important thing here is not just to rely on the stock, but also to improve efficiency of consumption. Of course, in Germany, the industrial consumption is very much reduced. France has turned out all of its nuclear power plants. And also, we've seen also even some coal plants are back in operation. So all these factors have certainly contributed to the decline in price of gas that we have seen. One important thing also I would like to mention here, which is always too much high prices will lead to changing consumer behavior. And that's what we're seeing. Because an excessive rise in consumer prices to 300 or more has led consumers to change in their behaviors and try to search for alternatives. And that's another reason why prices have declined further. Certainly, we need to be careful as we move towards November, December, and even beginning of 2023. And one important thing that we have to bear in mind here is how the war between Russia and Ukraine will develop. Of course, and these are some political discussions, but if we see kind of a peace deal within 12 months period, certainly that will also have another knock-on effects on prices of natural gas within the next 12 months.
Absolutely, Yusuf. And very quickly on this, I mean, some analysts say we are actually okay for this year. We have full storage for this winter. Now we must look at next year and next winter and actually hedge against that risk. Isn't it too early to tell, do you think?
I don't think it is just too early. But if as I just mentioned, we need to improve the efficiency of consumption. And certainly we don't know what the temperatures will look like, perhaps. But if we look at, for example, at the temperatures somehow similar to what we saw last year, then perhaps prices that can certainly kind of react to that. But certainly we need to be watchful. We need to be careful and improve efficiency or consumption efficiency, and also try and ensure that these stocks will remain resilient. Certainly, we can't have these stocks below 50% levels. And one important thing here is the U.S. different suppliers other than Russia, because currently Russia only supplies something like 9% to Europe, down from 40%. So the US, Qatar, and I believe Norway have kind of compensated for the loss of the Russian supplies. So even we need to continue, these suppliers need to continue as their backup support to the European continent. And I believe that will maintain stability in the markets as we move towards the Q1 of 2023.
Yousef Alshammari, many thanks for your update.